Welcome to the Corporate Treasury 101 podcast. This is the first snippet of our conversation with Bart Hendriks, Head of Global Treasury Operations at CEVA. Bart gives quite a comprehensive explanation of who he is and what he does at the beginning of the episode, so you get to know him a little bit better before diving into the topic of the day. In this episode, expect to learn what CEVA is and what they do, what is happening in the Treasury Department of CEVA, giving a good overview actually of how a Treasury Department looks like, what a shared service center is and a practical example with CEVA, what type of companies use shared service centers and why, how does Treasury can fit into a shared service center, and much more. This is honestly one of our favorite interviews we have done for this podcast. Bart is amazing, a well of knowledge, and willing to deep dive into certain concepts. We hope you enjoyed the episode as much as we do. If that is the case, why not giving us a rating? This is the best way to show us your support, costs nothing, and only takes 5 seconds. Cherry on the cake, it will allow us to invite more and more amazing guests as we grow the podcast. With all that being said, please welcome Bart Hendriks.
So, Bart Hendriks, how are you doing today?
I'm doing well. Thank you.
Very good. I'm pleased to have you on the show. Bart, could you please start by introducing yourself? What's your background? What do you do?
I'm currently Global Head of Treasury Operations and in-house banking at CEVA Logistics. I started my career 25 years ago in banking. I worked first half of my career in leverage finance, corporate banking across Europe for different banks, purely in the corporate domain. And I changed to corporate treasury now almost 13 years ago. Very new in corporate treasury, not new in banking and banking products, but new in corporate treasury. When I was asked to set up a corporate treasury department for a spin-off of Texaco called Delek. It's an Israeli company who actually acquired Texaco stations in the Benelux. And they needed someone to set up treasury. So I was a one-man show at the start. And later we set up a team across the Netherlands and Belgium. Then we acquired the BP stations in France. So I had a team in France as well. I also did some credit management. So totally different role than banking, but I really got hooked into corporate treasury.
Very cool, very cool. How was that transition for you? We've talked in the past with other guests and in other episodes about transitioning into corporate treasury. How was that transition for you?
It's huge. Huh? It really is huge. It's for me, it was very, liberating in the sense that while I had a very interesting and challenging job within banking, you're at the sideline. It's very deal driven, at least the business I was doing. So you advise a corporate purely on one single product. Once the deal is done, you step out. Moving to corporate treasury was completely different. First of all, you're part of the organization. So you're really ingrained in the organization and you have to know every specific of the organization as well. And next to that, it's very, empowering in the sense that you have your responsibilities, which is very clear, but you have to take your responsibilities as well. Just to give an example, so we were a carve-out out of the huge Chevron Texaco Treasury organization. We had a lot of foreign exchange deals we had to do because we buy fuel in dollars and we sell it in euros. Very basic. So in the beginning, I called 1, 3 or 4 banks and I said, what's your best price? And they always knew I was going to buy dollars. So they gave me a price and I said, yeah, go ahead. Then I found out that you had these electronic trading platforms. So I went to my CFO, which is actually, I think, still one of the best CFOs I've ever had. I explained the business case, expecting me to write 10-page business profile case and then wait for 3 or 4 months. And she actually said, well, yeah, just do it. Hey, come on. I mean, we need to move forward. This is a no-brainer. Just get it done. And that was so completely different than working for a huge bank where if you want to change something, it never happens or it takes ages. So, like I said, for me, very liberating, a lot of challenges in the sense that some of the things I had to do, I had no knowledge of. So I was not a typical cash manager who started as an analyst and knew everything about MT940s and these Swift and all these kind of things. But you learn along the way. And if you have an open mind, it's, like I said, for me, it was a big step, a huge challenge. Transition was big, but for me, there was no way back to banking.
Very interesting. Very, very interesting. So explain to us what you do now then at CEVA. Who are CEVA? What do they do? Can you give us like a brief overview and then your role there?
Yeah, no problem. So I joined CEVA just over a year ago. CEVA is a third-party logistics company, which means big companies like Amazon, like huge retailers, for example, they need to have warehouses, they need to have logistics functions, which they don't have themselves, and they outsource it to third-party logistics companies. CEVA is one of them. CEVA has a very long history, started out partly as a Dutch company, TNT Logistics, many years ago. So it's really from the postal services it started. And a long history in the Netherlands, even though it became a global company already 15, 20 years ago when it merged with an Australian company. It's been owned by private equity over the last 12 years, but was listed 3.5 years ago, 3 years ago at the Swiss Stock Exchange, only for a brief period of time, because then we were acquired by the French company CMA CGM. It's a large shipping container business company who is expanding and diversifying its business, and logistics is part of the whole value chain. So they acquired CEVA Logistics. When I joined, we were with 78,000 people. Our revenues were about 7 billion. That was in 2020. If we fast forward to today, we did 3-4 major acquisitions over the last period. And we expect our revenues to be for 2022 in the range of 15 billion. We are with 120,000 people and we operate in 160 countries. Like I said, we're part of CMA CGM, located in Marseille, its head office. We also relocated our head office to Marseille, but we are very independent in the sense we have our own treasury team and we have our own strategic decisions, of course, aligned with our major shareholder. Now, diving into the treasury organization and my role. So we have, given the fact that we did some acquisitions, partly carve-outs where we didn't acquire any treasury people, but also acquisitions where we actually acquired also treasury teams. We are in a very dynamic process at the moment to restructure the treasury organization. Currently, we have 3 main teams within treasury. One of them is credit management. One of them is middle office and risk management. It's more the reporting side. And then it's my team, which is treasury operations. Within treasury operations, we are responsible for liquidity management, so global cash management. We are responsible for intercompany funding and lending. And we are responsible for bank guarantees globally. So really the operational side. My team of 8 people is spread globally. So I have people working in my team in the APAC region, in North America, in South America, in Europe. Some people are located in Portugal, some are in the Netherlands, and some are in Marseille. So it's a truly global team. Even though we're a French company now, I have only 2 French people in my team. All the others are, like I said, located across the world, but also they have their origins there, so they know the local business quite well.
Wow. So between the appeal of treasury that's got you to stay in the end, Bart, and your new role in CEVA, you're quite the person to talk about for Shared Service Center and the topic we would like to talk about today. With your role, I guess, came the building of this team or the restructuring of this team, or so hired for that reason?
Yes. No. When I started, my team consisted of 2 people. one treasury analyst in the Netherlands. Well, actually, at that time, still located in Marseille, guy from the UK, who moved back to the Netherlands, and one very senior person already with the organization, CEVA, and also in Treasury in Singapore for over 10 years. It just, as a side note, as I said, we used to be a Dutch, the head office was in the Netherlands.
Mm-hmm.
As we moved to Marseille, none of the existing global Treasury team members located in the Netherlands actually relocated to Marseille.
Okay.
So the most of the team, give one or two, have a background in CEVA Treasury of up to 3 years. So it's, even though we have a lot of experience in Treasury, CEVA Treasury, we are quite a new team, which means we are still searching for the right spread of people across the different teams, but also the right competences within the team. So this is an ongoing search we're working on. But I was indeed hired as well to further build the team to have a global presence. It's also because our strategy, so our blueprint for our treasury organizations did change. Even though we're a centralized treasury, so we took most of almost all treasury functions from the local entities to a central entity in France. We do have regional cash managers / treasury managers who are located in the regions, who are part of the global team, but who are also, given the time differences and the complexity of the organization, we have regional treasury managers reporting into me.
Makes a lot of sense. So a global treasury team with the perks of having somebody in the local businesses to know and be close to the operating units. Awesome.
Exactly.
Okay, thanks a lot for this introduction, but this is going to be fascinating. We would like to talk about shared service center today. Maybe to begin with and to break down the term, can you explain to us what a shared service center is, and not necessarily with the treasury view, but because of course we're going to come to it in the future, but what is a shared service center?
Well, also in my view, a shared service center is a center of expertise where we try to consolidate processes across the regions. This can be looking at finance. This can be processes for accounting, processes for treasury, for example, for accounts payable processes. So you try to consolidate the processes, optimize its efficiency by also implementing technologies who make you able to have a global service for, in our case, our 160 countries in the group. That means that it really is for us a center of expertise. It's located centrally. In our case, we have two. One in India, which is outsourced, which means we don't own it. So we outsourced it to a third-party provider. And we have an insourced shared service center in Malaysia. So we have both, but it's really for making our processes more efficient, and more global, and more aligned with our business strategies, which also, and of course we can't hide from that, it's also a cost reduction because it's located in countries where labor costs are lower. So it's also from a cost saving perspective, because by working more efficient in shared service centers, we can allocate resources locally to more strategic functions.
Makes a lot of sense. So centralizing the operating units or the treasury functions, for instance, technology-wise, optimize the tools you have, but also in terms of human resources, right? You gather people together to make a more efficient process.
Absolutely.
Okay, makes a lot of sense. Maybe to continue breaking it down, what type of company use a shared service center, for instance? Does it need to reach a certain size, critical size, or is it as of a certain turnover, as of a certain number of people working? What's your opinion on that?
Well, I think you need a certain critical mass. Absolutely. So the companies I worked for two of them had a shared service center. So that's the current one. Three of them. I worked for a large dairy corporation called Friesland Campina. We had a shared service center in the Netherlands. So location, even though important if you look at the labor costs, it isn't always the main driver. It can also be local expertise. So this is a 10 billion company. Another company I worked for in Japan, a Japanese listed company, had its shared servicing center in Hungary for the European entities. Also there, it was one of the larger companies. So I do think, to my belief, it needs a critical size. It's very difficult to determine that in revenues or in employees, but there needs to be a business case to justify setting up a shared service center. But I do think with present technology, where it's easier for global teams to specialize and work together, that the business case can be much more interesting nowadays for smaller companies as well. With smaller companies, I do mean companies with turnover somewhere between 250 million and a billion, which I think in the past was not really the case, where you looked at the Vodafones and the IKEAs and these kind of companies with shared service centers. But I do think it's more interesting now also for smaller companies.
Okay.
Relatively smaller.
So for my understanding, Bart, and so is this an external company which these bigger companies come and contract services to? Or is this setting up for them something in-house that they use?
Yeah, that's a good question. And that so some companies indeed do like we do, use an external party. We use Infosys, which is one of the leaders globally. You can also build the business case to have this insource, to have a greenfield operation somewhere in, for example, Central Europe or in Asia, where it justifies to set up something like this. Now, you do need expertise. It's knowledge you have to acquire first, because it's not your main business setting up shared service centers. So if you have the resources, both from a cash perspective, but also from a people's perspective, to build your own shared service center, then there could be a business case. I do think for smaller companies to outsource this, it could be more interesting. You can also do it gradually by first outsourcing it and then gain expertise and then perhaps insource it at a certain moment in time. Could also be a strategy.
So a business case that hopefully you can submit to the type of CFO you dealt with, Bart, and that will accept it rather fast and not after a couple of years.
Yeah, but it is a huge step, because
definitely
the impact will be in each of the entities globally or regionally, wherever you work, because you will take away business. You will impact accounting teams in each of the entities. So the moment you start centralizing the processes in a shared service center. So even though paper, it looks like a very solid business case, there's also a human impact, because this is something I experienced when I was working for this Japanese company. The moment you build the business case and you say, okay, we can save 2F in accounts payable in Germany in this entity, we're talking about people. And we're talking about people who've been with the company maybe for 10, 15 years, have done nothing else than accounts receivable or accounts payable. And you tell them, no, we're transferring your responsibilities to Hungary. And that is difficult. It's more than a business case on paper. There's a human interest as well, which you have to take on board.
100%. And out of curiosity, how much time does it take to set up from scratch a shared service center? Do you have an idea? Like if you decide to build it, let's say, and not externalize it, just for us to have an idea, because I have no clue.
Yeah, that's a good question. I'm afraid I can't really give a straight answer there. And that is... Yeah, no, it depends a little bit on the processes you're planning to outsource. So if you're saying, no, let's start small and looking more treasury related, let's start with centralizing our payments. Also, you might know the term of a payment factory. I don't really like the term, because factory always, it's the connotation is not very nice. But so if you focus on payments, that could be relatively easy because with the current technology, you can scan invoices received locally and you can send them centrally to a shared service center where they will be paid. So that is easier. If you look at, for example, accounts receivable, credit management, wow, that's a bigger investment because and it takes more time. And because you have to train staff, you have to have multilingual staff because your customers are worldwide. They have to approach your customers, they have to call your customers. So this can take a long time, and this is also something which local companies and especially the local sales teams are very much afraid of. That we have people somewhere in Asia calling my customer that they need to pay on time. So. And that will take more time. And then we're talking about years to fully transfer the processes. Technically, it can be quite quickly, especially for accounting consolidation purposes. That can be done, again, given your footprint and your size. But that's 1, 2, 3 years. You can really transfer a lot of these processes to really set up a fully fledged shared service center. Yeah, it's an ongoing development. I really mean ongoing because even today, if I look at our treasury processes we are all the time looking at processes we currently do centrally in Marseille or still locally in the entities, how we can transfer those to our shared service centers. You can't really say, okay, let's transfer. To give an example, one of the processes we are currently are thinking of transferring, the fact that we have a lot of non-centralized cash. And without going into too much detail, a company most of the time likes to centralize its cash, that they have full control over its cash and they can use the cash where they need it most. In order to do this, you want to have the local cash at a minimum level. Now, we have hundreds of bank accounts locally. Even though we have centralization structures, cash pooling structures in place, we still have a lot of bank accounts not part of these kind of structures. So we want to reduce the number of non-centralized cash. So today we make our own report centrally, and we call our companies in the different regions and countries and say, well, you have so much cash, please transfer to our financing company. We want to transfer that process, at least part of the process, to our shared service center in Malaysia. Now, in order to do so, you can't just say, okay, can you do this for us? No, you need first a very, very clear process description. And you need to really test these processes first, if they work, and you can only test them yourselves. And then you can talk about transferring these. You have to set very clear KPIs because the people need to know in these centers of expertise how they can support us the best and how we can measure that. So it's not just saying, okay, we're doing this today, can you do this tomorrow? It's a process. Even something as small as very internally approaching our entities to ask for more centralization of cash, it can take up to 3 to 6 months to really transfer such a process once it's fully put in a clear process description.